we have exited a period of youthful exuberance where we sort of hit the ground running really fast and everyone was falling over themselves to make really ambitious commitments. We're realizing that in order to achieve these things in real life, we have to make a couple of changes. We have to be more pragmatic. And so it's an adjustment that's happening, a recalibration where we are sifting out flash over substance. And what's staying is the substance.
Welcome back, everybody. Rich Baker, founder of Collective Responsibility, here today with another episode of the Sustainability Ambassador podcast. Through this podcast, I'm speaking with sustainable professionals around the world about the work they're doing to solve the environmental, social, and economic challenges that we face. They may be working with government, nonprofit, academic, in the private space. My simple goal is to try to engage and inspire the next generation of ambassadors, professionals, analysts, consultants to come into their own sustainability journey, with the idea that they will get a little bit further along in their own careers, have a little bit more impact, and hopefully solve some of these big challenges that we face. And so today I'm extremely happy to have Nicole Martens, who is the head of impact investing research at Krutham, which is a leading think tank and consulting firm focused on developing financial systems to better achieve social goals. Nicole recently wrote an article called Sustainability's Wager: What If We Are Wrong?, about getting back to the first principles of sustainability. So Nicole, thank you very much for taking the time to join us.
Yeah, thank you so much for having me. I'm really honored to be here.
So as a starting point, I'd like to ask, who are you and what is the work that you're doing?
Sure, thanks. So my name is Nicole Martens. I head up the impact advisory practice at Krutham. Krutham is a think tank / consultancy based in South Africa, and we work with clients across the African continent, all the way across the spectrum of capital. So from philanthropy all the way to commercial investors on all things impact and sustainability and ESG. Our core mission is to make sure that finance works better for society. So that's what we try to do with our research and our advisory work.
Tell me a little about your own work. What is the work that you're doing over there, and how did you come into the space of sustainability and finance?
In my practice, which is the impact advisory practice, we work on everything from sort of policy and regulatory work. So we, for example, are working on a project now for policy reform to create a more enabling environment for impact investing. So we do like that kind of policy and research work. We also work specifically with the private sector and particularly the financial sector on things like sustainable finance strategies and transition plans, and how do you build credible transition plans. We do work with companies on their ESG strategy. We do a lot of thought leadership and capacity development for corporate leaders. And then, of course, we also do work more broadly around how to create more sustainable financial services sector, everything from looking at sort of grassroots financial operations through to large scale policy for asset management, for example. But part of what we do is we also build impact finance vehicles. So things like outcomes funds, for example, where we really are helping public sector bodies spend their money more efficiently to deliver real world outcomes. So we try and tackle, youth unemployment or marine ecosystem health through these kinds of vehicles. And I feel like it's a really good fit for me personally from where I came from. So I basically, like most people in this field, came out of university I am an environmental scientist and an economist, and decided my goal was to change the world. I was very clear at that stage that that would mean I would have to either go into the public sector or an NGO. And I realized very quickly that the public sector is not exciting and the NGO space needs CEOs or volunteers. And I was in no place. So I fell, as most of us do, into consulting. And I started doing a lot of work for companies on shared value strategies, because at the time that was like the buzzword was around shared value creation. And from there moved into looking at, well, where does the impetus come from for change? And it was really from the investor base, right? So that was where the big lever was that I saw. So I started doing more work with investors looking to private equity deals in Africa on how do you make sure that those are impactful and sustainable. And then was at the Principles for Responsible Investment for a good couple of years, heading up Africa and the Middle East, where I was working with institutional investors on integrating these brand new principles into the way that we make investment decisions and that we engage with our investee companies. And from there, actually moved into the industry, worked for an asset manager as a head of stewardship, where I was engaging with our investee companies on their sustainability strategies in order to make them more financially valuable, right? So it's sort of, I've come full circle where now I'm working with multiple organizations again. But it's always been about trying to pull this lever that is finance for more sustainable markets.
What have you seen over the last 15 years in terms of sustainability and investment? And where do you think we are now? Kind of honestly, like, is it as bad as people say, or is actually right now like you're pretty happy because it's a time to maybe get back to the basics and get more work done?
Where we are now, and there's almost been a pendulum swing of sorts. So when we started, it was all about basic first principles risk management. That's all we cared about. Then we sort of swung a little bit closer into impact and starting to worry about how we sort of got into stakeholder capitalism, right? And then we started thinking about double materiality and how we can be more impactful. And now we realize, wait, hang on, I think we got a bit ahead of ourselves. Let's just go take a few steps back. But we're not completely all the way just purely risk management. We are also still thinking in a double materiality kind of way, a lot more systemically. So I do think we sort of swung a little bit too far, and now we've come back, but it's sort of a 2 steps forward, 1 step back is still 1 step forward, right? And that's where I feel we are. So I'm pretty happy with where we are. I'm pretty optimistic about the next few years. I think we will have what survives this recalibration will be stronger than what was before, and it will be more credible and more accountable.
Okay, so that kind of leads me to your LinkedIn post and what you wrote. What prompted you to write that, and what were you hoping to spark through that post?
Yeah, so I think that particular post was really something I put together in response to the questions I'd been receiving from clients and other stakeholders in relation to the backlash that we call now. And it was really a lot of the questions have been around, what if we're wrong? What if the pushback is right? And so I decided to try a little thought experiment and ask myself that question to say, okay, well, what if the last 20 years of advocacy on my part have been misplaced? And what if I am wrong? And so I went back to first principles to unpack that question.
That's kind of brutal to think like the last 20 years has been, all for naught. But when you talk about these first principles, what did you mean by that? And what are these first principles that you kind of came back to?
I'm an economist, so I believe in sort of the efficiencies of the market and a couple of core principles around demand, supply, risk, and opportunity. And I went right back to the risk management side of economics and had a look at what is the opportunity if we act versus the risk if we don't. And when you look at it sort of from a pure first principles risk management lens of what's the worst that could happen, what's the likelihood that it could happen, in the context of sustainability, it's quite a startling sort of reality. So you think the worst thing that could happen is sort of total system collapse. The likelihood of it happening, the research is showing us, is increasing. And so just from that sort of opportunity cost angle, when you're looking at sustainable development or businesses operating in this market, it makes all the sense in the world to act with urgency and to be proactive to mitigate that risk.
So do you view this pullback then kind of as a temporary cycle or something a little bit more permanent? Or is it a mix of both depending upon what you're looking at?
Being described as pushback and pullback, right? I think it's more of a recalibration that's happening. I think we have exited a period of, I would call it sort of youthful exuberance and hubris, where we sort of hit the ground running really fast and everyone was falling over themselves to make really ambitious commitments without really understanding what it would take. And now what's happening is that we're realizing that in order to achieve these things in real life, we have to make a couple of changes. We have to be more pragmatic. And so it's an adjustment that's happening, a recalibration where we are sifting out. It's a pretty violent sifting out of flash over substance right now. And what's staying is the substance.
Okay, so the flash, the irrational exuberance, was that too many companies making commitments? Was that companies making too big of commitments? Was that us as sustainability industry not really holding truth to these commitments? Because we knew a lot of these weren't necessarily achievable. So what do you view as being we were too far out? Like, was it just there's too many companies making the commitments? Was it the wrong companies making commitments? Like, where did this start?
Yeah, I think for me, it's not necessarily the making of the commitment, it's the intention behind it. So I think there were definitely, governments and companies that made these commitments with the intention to achieve them. And there were companies that made the commitments because it was in fashion to do so, and they hadn't really thought it through. So the companies, and that's what we're seeing now, is those organizations that made these commitments because it was embedded in their strategy and the way that they run their business. Those are the ones that are sticking true to it. The ones that made the commitments, not necessarily, and I mean, it's not always out of malice that you sort of never intended to achieve them, but maybe didn't really realize how big of a commitment it was and what it would take in reality. They sort of did it because it was in vogue at the time and everyone else was doing it. And it was maybe led by the marketing department rather than the sort of chief risk officers. I think those are the ones that now are having a problem and that are having to sort of restate those commitments.
Yeah. No, I often come back to the idea that intentionally speaking, I think most people, they wanted to do good. Like they wanted to make some progress. They spent the time to understand the challenge, perhaps, maybe not as deeply as they needed to, but then maybe they felt compelled to make a commitment or to try some. And, it took 2, 3, 5 years before they worked out like, this isn't our issue. We don't have the resources. We went too far.
Yeah, and I mean, a lot of my clients, what happened, and depends on which industry you're in, but they sort of made the commitment based on a lot of assumptions about things like technological developments that would happen that haven't materialized, right? So the intention was there, but the assumptions that underpinned it were incorrect. And so now you sort of at a point where you think, oh gosh, my entire strategy was relying on, this particular development, which now hasn't happened. And now it looks like I'm backtracking, where actually I'm just having to recalibrate. But I have yet to come across an organization that doesn't care and doesn't understand that something needs to happen. But there are plenty who don't know what that is or how to approach it.
When you said there's specific industries they're waiting for specific technologies. Were there some that were just pretty common? Was it oil and gas waiting for CCS, or was it, the food industry waiting for something else? Like, where were the industries that you saw maybe the biggest gaps that ended up kind of surfacing over time?
Yeah, I think for me, there's two that sort of stand out. And so the first one is mining, where a lot of the decarbonization plans specifically were reliant on advances in renewable energy and carbon capture. And then the other one is actually, surprisingly to me, is in financial services. So particularly look at banks, where their sustainable finance target is really predicated on the fact that they will have clients who are demanding finance for sustainability investments. And if they don't see that demand, they can't match it with supply. So that's been really interesting, is that, big financial services companies, banks, asset managers, insurers sign up to these net zero commitments and then realize, oh gosh, the investments that we're making, at the end of the day, those investees are the ones that need to be making these changes. And so there's a couple of assumptions that we've made around how everyone's on board and everyone's going to move at the same pace.
I guess on that end, like speaking to intentions, I don't even think those are the right people in there, because they weren't necessarily from the sustainability background when they're looking at different, let's just say, deals or structures or, methodologies. Like they didn't really they came from the industry. They were deal makers, they were bankers, which that's not a problem. But when you're trying to do something really new and you're making these big commitments, that for me was like maybe the wrong people were in the position to begin with. And that was part of this issue.
Yeah, I think so. I think when we're looking at the way forward, where we're dealing with unprecedented systemic challenges, you need a different way of thinking. I think you need a systemic view of the world, and you need to be sort of by default collaborative. And that's not something that I would argue is sort of built into the current leadership structures in organizations. And so there is more than any kind of qualification, there is a way of thinking and integrating approaches that needs to be in place in order for you to address these challenges. And like you say, when somebody is a little bit more, let's say, myopic in their view, it's incredibly difficult to approach these issues.
But does it need to be in the sustainability department then, and they're leading it, like people who are knowledgeable and have the degrees and have the field experience? Or is it actually depending upon the industry, it sits in supply chain, it sits in PR, it sits in product marketing. Like, where do you think this bet sits then if maybe some of the people in the past weren't the right ones, but also at the same time, like being pragmatic, they shouldn't necessarily all be sustainability environmentalists either, right?
Yeah, so I think it's a really good question. It's something that, organizations approach us a lot with, as well as this idea of how do I resource for sustainability, right? What's the right model? What are the skills that we need? I would argue that there's a couple of different approaches. So one is to have your sort of central sustainability function. So everyone in there is a sustainability expert and they sort of work across the group. Another is to have embedded functions across the department. So you've got someone in supply chain who is tasked with sustainability, somebody in finance, somebody in risk. And then there's sort of combination of a hub and spoke type of model. And there, I think it's really important to have a bit of both. So you've got a centralized sustainability function, and then you've got champions in different units. And that allows you to have the macro level, that sort of systemic thinking and strategy, alongside the micro application of sustainability in a nuanced way for different business units. What I do think is really important for organizations to understand is that very rarely will you be able to have everything you need in-house. So it's really okay to outsource like niche expertise. Like not every organization needs somebody who has like a biotech degree in climate science. There might be some industries where that's really valuable, but it's probably more valuable to have sort of a general understanding of the issue and how it applies in your industry, and then in sort of micro functions have those expertise.
The trendiness is kind of gone. Does that mean that it's easier to be focused on a few issues, or do you think that, subscribing to every single problem in the world as a brand is still a smart approach as a starting point? Like let's say for whatever reason you have a mind that's just getting into this, and they're like, okay, we're gonna get started for the first time. Like, is the approach now gonna be different, do you think, because the trend is kind of gone and they need to be a little bit more pragmatic? Like, does that make it easier for brands to maybe get started or to actually make more progress now?
Well, one trend, so when you say the trend, so one trend that I'm a little bit concerned about is trying to address every single SDG. So what we are seeing, because a while ago, I mean, a couple of years ago, that was everything. Everyone was rainbow washing, right? So what I see now is that the focus is on identifying what are the financially material issues. And that allows you to focus on issues that are systemic, but also nuanced. And I'll give you an example. I think every company in every sector, your top priority should be climate, right? Just because when you go back to that risk management first principle, that is the most pressing challenge that you face. So you should absolutely be looking at mitigation and adaptation strategies. And then, depending on the nature of your operation, you might find that stakeholder relations or sort of community development is one of the biggest issues for you, or maybe it's water, or maybe it's biodiversity, depending on how you impact, the planet through your operations. So I think now we've sort of given organizations the permission to tailor their strategies and not just try and be all things to all people and try and solve for every SDG.
As part of that, do you see that there are specific issues that are bubbling to the top and are pretty ubiquitous, and do you see some that are falling away that aren't so important right now?
I still think climate remains a priority, but organizations, particularly in certain markets, are a bit more hesitant to speak as strongly about their focus there. So you'll see more talk about mitigating stranded asset risk versus, we're trying to decarbonize. So we're trying to sort of talk less. Something like DEI, I mean, there's research that came out this month that said, despite the sort of pushback, the vast majority of the S&P 500 have got policies in place and board level oversight for DEI, but they won't speak about it. I would say the big shift I've seen in the last few years, or let's say the last sort of 18 months, is that biodiversity is rising to the top. But we're seeing human rights and labor rights. That's definitely coming to the fore a little bit more as people try and stay away from talking too much about the E. So the S is getting more attention.
Does that mean that we're being driven a little bit more, or should be driven a little bit more by, say, truly localized approaches instead of saying a global umbrella? Because when you mentioned kind of like the South African context, right? Like climate's not necessarily the top thing when you have other issues out just in the community right away. I've been saying that for years, that Al Gore's polar bears, solar panels, climate change model, it just hasn't worked for a lot of markets. Like it's not to say it was wrong, but it wasn't engaging in any sense locally. It wasn't solving local issues. It wasn't building markets or brand strategy. Although at the global level, you could accept some awards. You could say you had your SBTI, and it worked for your investors in stock markets and maybe EU, US regulators. But for a true approach, do you think that we're now looking more for something that's localized? And if so, like that feels like we're going back almost 15 years, and that makes it even more difficult to, let's just say, manage, create systems, measure, and report on the longer term.
Yeah, I think in reality, we have to do both. So I think what you'll find is most markets and many organizations are operating at both levels. And that's where I say, having that systemic lens on the market is so important. So we're identifying what are those big overarching issues that we have to address because they exacerbate the issues that manifest locally. And so you're having to do both. I don't think you can feasibly get away with focusing on either or at this stage. And so the challenge is immense, but I think organizations are realizing, and that's part of this recalibration, that they need to address these issues on multiple levels.
So where do we go from here? Like what do you see going forward? I feel like the challenges are kind of still growing at a size, scale, and speed that's not keeping up. We kind of gave up on consumers to save the world a long time ago. We kind of had hope for the corporates because the governments were keeping up, but now that's kind of fallen off. So where are we actually on the issues? And do you think that, in 2 years, the pressure on companies will grow again? Like it's just a kind of a pause in expectations while the economy stabilizes, geopolitics stabilizes. Then once we all agree that corporates are evil, we must focus on them. Like, is that what's going to happen? Or do you think that this is actually the new normal, as it were?
Yeah, I think that's an interesting question. I
Because
would
we got to
think
solve
in
these
the next,
problems, right? Like we still have to
yeah,
solve them. So I'm
yeah, they're
curious,
not
like, how do we
going
do that?
anywhere. Yeah, the problems aren't going anywhere. I think what we will see and what we are seeing is a continued push from policymakers and regulators on what is an acceptable bare minimum level of compliance, right? And those standards will rise. And I think alongside that, what we're also seeing, particularly, and it's gaining traction, and I think it'll come to emerging markets soon as they become more litigious, will be communities and civil society holding private sector and governments to account. And so there'll be, I think, increasing class action lawsuits and litigation around that kind of thing. So really what I see over the next sort of 2 to 5 years is just increasing accountability. And for many enterprises or organizations, I would imagine that at the start, the real threat there, again, risk management, the real risk is going to be reputational because the fine will probably be something you can afford. And no one's going to go to jail instantly unless it's a huge, grievous violation of some sort of regulation. But the reputational damage will be significant. And so going forward, I see in this increasing world of growing accountability and having to take responsibility for your impact, that's what's going to be the driver. It's going to be the lever of sort of public opinion in relation to what we consider the bare minimum.
As I guess the previous 5 to 8 years, we became this bubble. I feel like the floor was rising and it was pushing all boats up. But at the same time, we also lost the leadership, the vision, the ceiling came down at the same time. And I feel like I think we're a little bit more focused on the fact that we feel like there's no more leaders left, that everyone's just a follower now. And that itself is like the problem, even though I'm not sure that that's the problem that we should be worried about.
Yeah, I definitely hear you. I think it's sort of disappointing, right? It's a shame to see, but I do see flickers of it still. So let's take, for example, that the Net Zero Banking Alliance, right? That's rethinking its whole approach. There's a bunch of members of that alliance that have restated their commitments, right? That have come out pretty strong. We've seen some asset owners recently that have taken away mandates from asset managers who've abandoned their ESG commitments. So I do think there are flickers of sort of proactive standout leadership. But like you say, I think probably that sort of spearheading at a leadership level at this point is a luxury. We need to get the foundation solid.
I want to switch a little bit maybe to your own industry and say the financial sector, because for me, that was where I thought things could get really interesting. And that, if you had BlackRock and HSBC and all these large financial institutions basically creating their own standards, if they could actually globalize their standard, they could really make a lot of progress. But do you see that that is still true, and have they pulled back? Because I feel like it's if the companies are pulling back, that's one thing, but if the financiers who are pushing them to do all these ESG standards are pulling back, that's a whole separate thing.
Just this week, BlackRock put out a letter to a bunch of US states, right, in response to the allegations is a strong word, but I guess the push from regulators against integrating ESG into investment because of the non-pecuniary factor sort of approach. And in the letter, BlackRock re-emphasizes that integrating ESG or taking into account these risks is part of its fiduciary duty to its clients. And so it will continue to do so as far as is possible. Just this month as well, a survey came out, ISEO survey found that 97% of asset managers have still got some sort of ESG or responsible investment policy in place and sort of resources dedicated to that. So I'm definitely seeing they are continuing to pursue it. I mean, the sustainable finance market is growing, green bonds and loans are growing. We see that even US investors are continuing to look for sustainable finance opportunities just outside of the US. So I think it's one of those things where it's definitely a political retreat around the language that we use. And there's definitely an aversion to public collaborative engagement. But in practice, the integration of ESG into the way we make investment decisions is still carrying on. And again, because it makes sense, because these organizations that have been effectively integrating material ESG factors have seen the upside and they can see the risk mitigation that presents. At the end of the day, if you're not integrating ESG, you're just introducing unnecessary risk into your portfolio, which is just bad financial management. So they're definitely still doing it. They're just a lot more careful about how they talk about it.
Actually, can you speak a little bit how it does reduce risk, or how by not doing it, you're introducing it? It's like, talk to me about like maybe how you find it does help either make better decisions, or by not participating, you're actually introducing more risk. I'm really curious about your own lived experience through that.
I mean, it is one of those things that's really difficult to quantify. What you can measure is the value at risk, which you'll know, and you can measure upside, but it's difficult to attribute it to a particular factor. But what you can see is that, for example, companies, so South African Reserve Bank this month also put out research where they assessed climate awareness in banks. And what they found is that banks that are more climate aware and that are integrating climate mitigation adaptation into their strategies are at lower risk of defaults. Like, there's a very clear finding for you. We also have research that shows us that ESG integration, at worst, you match your benchmark in terms of performance, and at best there is an outperformance of the benchmark. So that kind of thing it's intuitive and it's indicative of a trend, right? So there's definitely not, I think, while we haven't proven that it's, X% return each time, what we have shown is that there's not a trade-off. As well, in particular industries where you've got a precedent. So let's say like in mining, there's plenty where you violate a human rights standard, for example, or in financial services, if you have a big governance scandal. And we see what happens to the share price of those companies in the days or weeks or months following that kind of disruption. That's a perfect sort of case study that shows you there's a negative financial impact to not considering these things. But I agree, it's very difficult to sort of quantify the upside. But again, if you go back to those first principles, you're avoiding risk, right? If you're thinking about these things.
Is it getting easier to quantify? I mean, we've been hoovering up all this data, ESG, society, the whole deal. Does it get easier and easier with each year as there's clarity? Like, was it a problem of just kind of poor data, inconsistent data, incomplete data? Was that part of why we're unable to quantify a lot of this? And if so, do you feel like that will get better over time?
Yeah, I think it definitely will. I think we're getting increasing data points that we can work with. I think the PRI is actually busy at the moment with, I think it's a 3-year project on the private market side to quantify upside of ESG integration. So the ability to gather that information and to make those calculations and to draw those inferences is definitely growing.
Yeah, I kind of liken it to we're coming out of a movie theater and we can only see kind of part, and then over time we're getting a wider vision and able to incorporate more. And I've talked to on the supply chain side. I remember talking to a very large brand, having lunch with the chairman. They were saying, look, we managed the E and S very closely, because when we're selecting our suppliers, what we found was if we have high standards for environmental performance, social performance, governance performance, actually it's not about being nice. Those suppliers are going to be the best run businesses, that they've really thought about the longevity of their company. They've really thought about their people. They really thought about their process. And he was like, for us, that means stable prices, quality controls much higher, partnerships and innovation grow. He's like, there's all these benefits which you can't quantify, but as chairman of this group, this is one thing that we know. Like, once we put in this standard and everyone started to get the information, we saw improvements across the board in our own business continuity.
A lot of it is largely intuitive, right? So a business that has a broader risk aperture is going to be better run if those risks are then mitigated. And that companies that care about their people and the markets and their consumers are going to have better customer loyalty. And that's the kind of thing, as an investor as well, that you're always looking for. You want a company that's going to be sort of stable and resilient over time. And so why wouldn't you want it to be considering all the possible sort of risks that it's facing?
All right, so I kind of want to go back to your first principles here. If we strip it all back and we kind of reflect a little bit on this conversation, maybe on your own work, like what are the non-negotiable principles when you're setting up your sustainability strategy?
Let's say you've already got a commitment or you're thinking of making a commitment. It's all about credibility. And for me, credibility comes down to 2 things, right? It's enforced by 2 things. The first one is data and evidence. So you really need to invest in data analytics. It's so important. You can't make plans or strategies based on wishful thinking. And the other is stakeholder engagement. For your plans, your strategies to be credible, there needs to be buy-in from your internal stakeholders. So that's from the top, really important, from the top, from the bottom, and then your broader stakeholder sort of market, and your consumers, your communities where you operate, policymakers and regulators have to be part of that conversation and be okay with what you're doing. If you can do those 2 things and do them well, then that's a credible strategy. And it also allows you then to, when you need to, make recalibrations and adjustments based on the realities of the market, because you've secured that buy-in and you've got the evidence to back your decisions.
Okay, now that's at the, say, like the company level. What about at the movement level? Like, we went from, like what I was saying, as a ragtag group of people who are trying to, really push companies and really, like work with the leaders, to just a massive industry of thousands of professionals, young, middle, executive. We have degrees, we have certifications, we have so many events. What are the first principles for us as an industry now? Like, what should we be learning as professionals, as leaders in this space, as kind of individuals who are just out there pushing? Like, is this a time where we should be reflecting on our own work as well?
It just blew up overnight. I don't know if you remember that meme that had like the fastest moving things on the planet, and had like airplanes, cheetahs, and then people becoming sustainability experts was like the fastest. I think as sustainability professionals in this space, it's definitely time to take a breather and assess where it is you want to be adding the most value. I think there's 2 clear splits for me. There's adding on breadth and then adding at depth. So there's integrated, systemic, strategic thinking, where you need to understand a little bit about a lot of things, right? And then there's deep technical expertise, where you need to understand a lot about one thing. So reporting frameworks or a specific ES or G issue. I think people are increasingly hiring for skills-based applications. So it's less about what qualification I have and more about what experience do I have. Like, have I actually led a company through this process before? That's much more important. So yeah, as the sort of sustainability practitioners, definitely time to do a rethink about where we're adding value. I hear your points about there are so many events. It's something that's definitely changed. I remember, 15 years ago, ESG or sustainability would have been the last panel on the last day of some sort of finance conference, and there would be 6 people in the audience. And now we've got entire conferences dedicated to this. I think it's time to start thinking about whether we want to move beyond a talk shop or echo chambers, really get involved in conversations with people who are not yet convinced, have those hard conversations. I think that's really important. So identifying where are the gaps where we can add the most value, where there's a need for change, and try and get in there.
Yeah, I think the event space was really fun because, and I have a couple conversations coming around those where it's like we spent a lot of time on stage creating what I call sustainabilities, where you had, 15, 20, maybe 30, 50 people who were at every event. You can probably name 5 of them and I'll probably like, yep, seen them, yep, seen them. And again, like I'm not in any way besmirching their work, their effort, the message they're trying to get out there, but it was like it became its own, like that was your job. And rarely was I hearing anyone talk about the impact of the work they were doing. And I can still look on LinkedIn and I can still see plenty of people I've been connected to for years who are talking about how they got this award, they met that person, da, 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 but they don't talk about the work anymore. And I feel like that was the thing that I felt like we got away from. We started talking at people, and maybe to your point, like we're not convincing people actually. We're not converting anybody. Like we're making it too hard for them to come in because we're sitting out there like standing on top saying we're better than because we are at this event because we got this award versus this is the work that we did and this is how we did it.
Yeah, I think we lost the so what of it, right? So it was a lot of talking about what's going on, what we're doing, but not enough about and so what. So what did we actually achieve? And I think really importantly, what did we learn along the way? Because it's not all sunshine and roses, and we don't get it right first time often. And so I think there's a lot that we could do as sustainability professionals in our own community about sort of being real with each other and saying like, okay, here's what I got really wrong, or here's what I'm really struggling with, or what we haven't cracked this nut, as opposed to, like you say, getting on a platform and talking about how amazing everything is and how we've achieved so much. We've still got so far to go. I think we could do with a little bit of humility and pragmatism.
Wrapping up, I guess if you could give 2 or 3 pieces of advice to sustainability professionals who are kind of navigating this moment, what would they be?
Yeah, I think the first one is to work on your ability to channel your passion into a practical solution. It's one thing to be really strong in your views it's really easy to get to a point where you start to feel like I'm right and people are wrong. And you might be right, but that's not going to move the dial, right? You need to be practical. And I think that starts with, and this is, I think, the core of it, is come into each conversation from the base assumption that every perspective is valid. So you are going to hear views about, I can't focus on this right now. It's going to cost me money. My shareholders aren't asking me to do this. The policy isn't there. The regulation isn't demanding this of me. That is all valid. Don't start off by dismissing that. Start off by understanding that this is a real shared concern. Trade-offs are real. And then from there, be really practical and say, okay, but the evidence is showing us this. The movement in policy and regulation is in this direction. And really try and have those conversations. What at the end of the day, the evidence is there to support you. It doesn't have to be a values-based conversation. I think if I can give tips to people in this space, it's really about not trying to get everyone on board with the same sort of value, ethics, morals argument, but really get back to what does the evidence show us and what is the pragmatic way forward.
Well, thank you very much for your time. That was awesome.